Alright, so welcome back everyone to another weekly outlook for the first week of March. For those of you who are new to the channel and this is your first video, my name is William, the main live streamer for Callisto. So we host weekly outlooks every single Sunday with our members in Callisto, where we go through the past week's win rate for our trades, fundamental news that's occurred over the past week, and we also take a look at the upcoming high impact news for the week to prepare ourselves to take advantage of the fundamental bias to push our trades in the right direction. So those of you watching on YouTube, make sure to subscribe and click the link below in the description to make sure you get updated along the way in the free channel as we continue to give out free signals and education on a daily basis. So without further ado, let's get this session started. Okay, now, so for this past week, it was an amazing week. We won, or rather we had a 86.7% win rate. Okay, and these are the trades that we took for the week from 26th of February to the 1st of March. Okay, we won 13 out of 15 trades, and in total, we managed to net 655 pips in a week. So to put things into perspective, in terms of monetary gain, we made $6,550 per standard lot. This is how much money we have made, okay, if you join us for this week, 13 out of 15 wins. So now, and here is what happened. Let me give you a recap. So, take a look over here. There are two main news that came out. Number one is the Japanese news. So what happened was this. Japan has issued fresh warning against excessive yen moves. So what happened is the Japanese finance minister, okay, what he announced is, okay, the Japanese yen is weakening too much, too quickly, and too soon. Okay, because of the negative interest rate policy, where there are many traders and many speculations revolving around the yen where many people are shorting. So this has caused a large decline in terms of the Japanese yen currency value. So what they're going to do is this, okay, since the yen is depreciating too much, they're going to control it. How do they control it? They're going to personally intervene in the market and have indicated there is a heightening of the chance of currency intervention. And just to give you a history on what happened, okay, Japan previously has intervened in the currency market 3 times in 2022. And where did they intervene? They intervened when USD JPY is near 152, the psychological level. So what can you expect from the intervention? Very simple. What the Japanese government would do, or rather what the Bank of Japan would do, is they will conduct US dollar selling to short the USD and to buy back the yen. This will artificially create a bullish demand for the yen, meaning every single currency pair trading against the yen will dump because of the strengthening yen. Simple as that. So when price reaches near 152, we can expect to have Japanese intervention. That is what the Bank of Japan is telling us. That's one. Next. The next recap will be the Kiwi or the New Zealand dollar. So what happened was this. Earlier during Wednesday, the New Zealand Central Bank, they have announced that they're going to hold their interest rates and they have toned down their hawkish stance. For those of you who are confused as to what hawkish is, hawkish means bullish. And the New Zealand, Central Bank of New Zealand, they have announced that they're going to tone down their bullishness in terms of monetary policy for the Kiwi, for the New Zealand dollar. And the reason why is because, take a look over here, okay, previously, because of the worsening inflation in New Zealand, the banks, in order to combat this worsening inflation, they are consistently hiking interest rates. And when they hike interest rates, what will this do? What this will do is, this will create a bullish pressure for the Kiwi. With higher interest rates, this will result in many more people feeling, okay, since there's a high interest rate in holding the New Zealand dollar, let me just buy more Kiwi. Because they see there's a higher ROI into holding the Kiwi. So if a higher ROI into holding the Kiwi, more people buy. When more people buy, there's increased demand for the Kiwi. When there's increased in demand for Kiwi, the Kiwi will appreciate in terms of value, and then the Kiwi would pop. That's what interest rates do. Basically, long story short, okay, high interest rates, stronger currency. But since, okay, they have chosen to hold and maintain the interest rates instead of hiking them, which was the original plan, and instead, they have lowered their forecasted cash rate or forecasted interest rate peak, okay, from 5.7% previously to 5.6%. So there's a decline in terms of interest rate expectation. And this has resulted in the Kiwi to be bearish. So right now, there's a bearish outlook for the Kiwi. So when the market reopens tomorrow, okay, we can look to number 1, long the yen, number 2, short the Kiwi. So these are the two recaps that has happened last week. Okay, and of course, okay, there are also a few news we need to take note of pertaining to this week, and there are three main pieces of news. Number one, the most important one, okay, this week is NFP week. For those of you who do not know what NFP is basically, okay, a US news, which measures the change in the number of employed people during the previous month, excluding the farming industry as well as governmental employees. So effectively, with a higher NFP data, it means there are more people that are employed, and this will result in having, okay, more people having a greater faith in the economy, where the economy is expanding, and therefore this will bring in more investments. People will tend to buy more US dollar, okay, convert it more into US dollar, as they feel that, okay, economy is expanding, and there are more opportunities to do so. So effectively, with a high NFP data, this will result in the USD being bullish, being good. So this will all happen on Friday. And, okay, so what will happen, chat? Alright, what will happen, premium, is effectively, okay, the previous NFP results is 353k, forecasted is 190k. So what we are mainly concerned with is for the value to compare. Is it going to be greater or lesser than the forecasted? And that is where we can choose to make a position. If it's more than 190k, it's going to be good for the USD. If it's going to be less than 190k, less than 190k, it's going to be bad for the USD. Simple as that. Okay, very, very important. That is NFP. Okay, next will be the ECB press conference. Okay, ECB means European Central Bank. So what do they do? During this press conference, they're going to discuss on the future of the Eurozone's interest rate policy. So similar to the Kiwi, as I have explained earlier. Okay, the interest rates. Okay, with a high interest rates, this will bring in more investments, as people will feel that there are more ROI, people will hold it more, and this will lead to a stronger currency. So the forecaster is 4.5% in terms of interest rates for the Eurozone. So this will happen this coming week. Okay, and depending on how it releases, if the interest rate policy is more than 4.5%, this will result, okay, in having a bullish pressure on the euro. If it's less than 4.5%, this means there's an interest rate cut, and there will be a bearish pressure on the euro. Okay, this will happen this week as well. Okay, the third piece of news, okay, is also the Bank of Canada, BOC. Okay, same thing like the euro, they are going to be discussing on the future of Canada's interest rate policy. Okay, and it is forecasted to be 5%. So if they're going to hike the interest rates, which means the interest is more than 5%, this will result in a greater demand for the loonie, or rather for the Canadian dollar, and the Canadian dollar will pump. If it's less than 5%, okay, it means there's an interest rate cuts, means people will pull off the Canadian dollar, pull off the loonie, and the loonie will dump. Simple as that. So three key pieces of news that's coming out this week, and they are the ones that will create a fundamental shift in the market. Okay, now that we are done with the fundamental aspect of this, let us go to the charts to look for potential setups, potential entries via the trading view, via candlesticks. So now, let's go through. First pair I want to go through with all of you will be Euro AUD. Okay, so Euro AUD, what do we expect? Very, very simple. On a 4-hour time frame, you notice that price, okay, is very, very bullish. It has made a strong impulse movement upwards from 1.648 all the way to 1.668. So this is effectively a 200 pip movement upwards, a pump, where price did not really retrace. So now, where do I look for entries? Since price is in an uptrend, I'll really look for buys. And right now, price is currently retracing. So what I do is, okay, I draw the Fibonacci from the start all the way to the end, and therefore giving me my few key levels. 0.382, 0.5, 0.618, 0.786. So now, the two key levels that I'm mainly interested in are the 0.5 to the 0.618 level. They are known as your golden zone. Okay, whereby price is likely to tap into the range and its retracement over there and then bounce off it. Okay, but of course, trading the golden zone itself, or trading the golden zone alone is not enough. Okay, in order to have a 90% win rate, okay, a high win rate as like me, you need to combine with other factors. So one factor I use to combine it with is by using the order block as well. Go down to the 1 hour time frame, you notice, okay, there is a 1 hour bullish order block formed between 1.657 and 1.656. And right over here is the intersected zone between the 4 hour golden zone and the 1 hour bullish order block. So what does this tell us? Okay, this tells us that the moment price taps into the area, there's a very strong likelihood that price is going to pump all the way up at 1.657, 1.656. So chat what we can expect from this Euro odd pair is, okay, right now price is about 30 to 40 pips away. Once the market reopens, depending on how the market opens, okay, the moment price taps into this area, we can instantly look for buys. But if you want to look for bread and butter setups, it's better to look for bullish reversal patterns. But by itself, this is a Fibonacci plus order block strategy. You can look for instant entry at 1.657. Simple as that. This is for Euro AUD. Okay? So yes. Now, premium. Any questions? Any questions you want to ask me? Okay, do all of you understand? Now is the time to ask questions for Euro AUD. Clear? Not clear? What's the bread and butter setup by Roger? Effectively, what I have explained to you earlier. The Fibonacci plus order block strategy. That's my bread and butter setup. Where I'm looking for entries, okay, at the intersection between the golden zone and the order block. But if you want the absolute bread and butter, of course, you want to look out for bullish reversal patterns. Okay, any questions about Euro AUD? Any questions not pertaining to Euro AUD, I'll ignore. Okay, stick to the agenda chat. Any questions, you can ask me later on. Euro AUD. Any questions about that? All clear or not? All clear, Looking the same. Okay, very good. Looks nice. Wait for candle closure before market execution right for confirmation. Yes, candle closure, very important. When you say bullish reversal patterns, do you mean bullish engulfing candle? Yes, Sally. Bullish reversal patterns, they include bullish engulfing, hammer, morning star, okay, tweezer bottom, dragonfly doji, so on and so forth. Those are your reversals. Okay, I posted videos about that. Go and take a look at that, Sally. Can I? Okay, good. Okay, RJJ asked, William, for EA, the 4-hour order block got tapped already. Okay, let's take a look. Right over here. The 4-hour order block, has it been tapped? Yes, it has been tapped already. But did it tap the 1-hour order block? No. I'm very specific. Okay, if you're doing it based off the 4-hour order block over here, then you have gotten an entry already. You'll be up in profits about 20 pips, close to 30 pips. With basic based on 1 hour, no. Okay, I do on the 1 hour because I'm a bit more greedy. I'm not saying greedy, but I want to be more precise. Okay, you do on the 4-hour order block, your stop loss will be bigger. But I want a more better R, and I want to be more precise in my movement. So yes. Okay. Can Okay. So this is Euro AUD. Now, moving on. Next pair I want to go through with all of you is USD JPY. So USD JPY, right over here, what I'm looking out for. On a 4-hour time frame, you notice, okay, that price is ranging between two key levels. One at 150.9 and another at 149.8. So this effectively, okay, is a 4-hour range. Now, what do I want to look out for? Okay, if you notice carefully, this 4-hour range is also a William certified range, a WCR. Okay, and what is a WCR? A WCR is effectively here 90% win rate strategy, whereby if you look for sells at the resistance or buys at the support, you win 90% of the time. So what makes up a WCR? Very simple, 3 conditions. Number 1, the range must be on a 1 hour, 4 hour daily time frame. I mean, as evident over here, price is in a 4 hour time frame. Check. Secondly, the distance in pips between the resistance and support is at least 100 to 150 pips. So you look very carefully using a ruler. The pip count is 110 pips from the resistance to the support. So check. Lastly, at least 2 points contact on both the S and R. Over here, you can see price, multiple taps, multiple taps. Okay, 2 point contact. So all 3 criteria are met. This is a WCR. What do? Look for sells at the resistance and buys at the support. So I'll be looking for mainly for sells at 140.9 and buys at 149.8. So now, this is a little bit special. I said earlier, premium, that, okay, the Japanese currency right now is extremely weak because of negative interest rates. So since the Japanese currency is weak, I will mainly be looking for buys in USD JPY. Now, some of you here might wonder, okay, I will look for buys in JPY, but didn't William you say that there's Japanese intervention? Shouldn't you be concerned about that? Yes, we did take it into account and we need to take into account of the intervention by the USD JPY or by the Bank of Japan for USD JPY. But as I said, for UJ, they are mainly going to intervene near 152. That's the history of it. So since we are only at 150, we can look to still long the pair. But once it gets closer and closer to 152, then that's why I'll be a little bit more concerned already. Okay, simple as that. That's for USD JPY. So AUD JPY. Now, AUD JPY. What do I look out for? Right over here. Okay, AUD JPY. So AUD JPY is a little bit different. I'll be using SMC concepts, which I have done so earlier during the backtesting. So now, if you take a look right over here, price is in a downtrend on the 4-hour time frame. Okay, going down and down and down. So now, what do I look out for? Okay, on my 4-hour point of interest. Okay, for a 4-hour bearish order block, which you've seen right over here, which I've knitted out and drawn out from 98.5 to 98.35. So, with a 4-hour bearish order block over here, what do I look out for? I mainly look for sales. How to look for sales? I go to the lower time frame to look for entries. So I go down to the 50-minute time frame. You notice, okay, cool. What do I want to happen? Okay, since I've done the 4-hour bearish order block, I want price, okay, to pump all the way up, as seen right over here. Okay, I need price to first tap into the 4-hour bearish order block. Okay, and there's also a 50-minute bearish order block over here. Price can potentially tap into there. So I need price to pump up and up and up and up and up, like this, up and up and up and up and up. Tap the order block on the 4-hour time frame and the 50-minute. Once price taps, what I want to happen is a rejection. For price to dump down, to strongly reject. Meaning there are strong bearish order flows as seen over here. A dump downwards. And with this dump downwards, premium. On top of that, I want it to form a change of character. A chokchi. Meaning I want it to break under the previous higher low. Because in order for price to tap over this order block, it needs to first pump up. So for us to look for sales, I need a reversal on a lower time frame, which is a change of character to form. A dump downwards. And a candle closure under this level. Okay, where would the change of character be? I do not know. I need price to first form. But in this particular scenario, okay, it means a break of the previous higher low. So now, once the change of character form, what will I do? Same thing as I explained earlier during the backtesting strategy. I want price to first sting into the fair value gap or sting into the 50-minute bearish order block that will be formed based off the strong impulse movement downwards. Okay? Once price stings into the 50-minute order block or 50-minute fair value gap, I will enter a sell. I will short it. With my stop loss placed above the 50-minute OB that was formed, and TP is at 1:2. Simple as that. Okay, this is my change of character. Or MSS, market structural shift. They are the same. Okay, which is how you ask. That's it for the weekly outlook session. Okay, so I hope this video here has brought value to you. And if it has, don't forget to like and subscribe to the channel so we can reach out to impact more traders like you. I'll see you in the next session.